Welcome back for another top-notch video. This week, guys, we'll be talking about the week of February 8th through February 12th. As always, our channel is about the Thrift Savings Plan, or the TSP. We also talk about brokerage accounts, Roth IRA accounts. If you are in any of those, we talk about investments. If you're in the TSP, we talk about the C, S, I, and F fund. For those in brokerage, Roth IRA, or any other kind of accounts, we talk about the ETFs, IVV, VXF, EFA, and AGG. These are investable, and you can put money in these today or tomorrow or anytime, and these are the accounts we like to talk about. This account up here equals the S&P 500. This equals small caps. The I fund or the EFA ETF equals international markets, and the F fund or AGG equals bonds. We go over a broad overview of these funds, and then we go into a technical analysis. If that is something that interests you, please like, subscribe, or share. Let's get right into it, guys. For this week, the Thrift Savings Plan TSP talk is what we like to look at. Kind of gives us a broad scope overview of our charts. For a weekly percentage, the C, S, and I fund were up quite significantly for the week. We got 1% here for the C fund, 3% for the F fund, and 2% for the I fund. That is pretty significant. As you can see, these charts are up pretty significant for the year, while our F fund or AGG is lacking behind for a little bit there. For kind of a broad overview, we like to look at the comments that the TSP comes up with. Please check out their website if you're interested in them. As you can see, one of the more interesting things about February is on the back half of February, historically we tend to see kind of a decline. This is based off of quite a few years of what we've been seeing, and they kind of average the percentage of what we've seen. So just keep that in mind as we move into the back half of February. For our charts, broad scope overview, as you can see, for our moving average, which are these lines down here, we are above all that. That is positive for price. And with our trend lines, we are still within, price is still within our trend lines. So that is positive, but we are on towards the top of our charts. Last time we hit that was the end of January. We had that downward spike there, and we were able to rocket right back up. So please keep that in mind in regards to charts for the IVV or the C fund. As far as the VXF goes, ETF or the S fund, as you can see, one thing that is kind of cautionary here, we are at the top of our trend line. That is something that is kind of a little bit of a warning sign there, and we have a lot of gaps in here. 3 gaps, to be perfectly honest with you. Gaps, this is a double gap here, tend to be filled by price when price comes back down, and these are all within striking range. With the exception of this one, these are definitely within striking range. So we want to keep that in mind moving forward with price. The next thing I want to show you guys is EFA or International Markets I fund. Also, we have a double top, it looks like, here forming. Hopefully it can puncture through that and continue upward. But we also do have an open gap down here to keep in mind. The last chart we'd like to look at is bonds. What are we seeing on bonds? As you can see, one of the negative things with bonds, we have a bear flag forming here. Usually when we have this line down like this and this flag forming, we're looking for another leg down. We saw that up here. There's a big bear flag here, and price continued back down, so that could continue to downward spiral. With it underneath our moving averages, that's not a positive place to be in for bonds. Not a place I'd want to keep money for the time being. Alrighty, guys, that's our general overview. Let's move into our technical analysis for our charts. Here is IVV. As I mentioned earlier, IVV or the C fund is at the very top here. If we get a breakout here, that is a positive thing. We'll have to wait and see where that goes. We have our move above the moving average. We are above our trend lines. Things look pretty positive for the time being for IVV. On a technical analysis, let's take a look at it. The two charts we like to look at are the weekly, which is long-term charts, and short-term charts. We look at 2 indicators on the top-notch channel. We look at the derivative oscillator, which is the green bars and red bars. Typically when green bars go down to red bars, price, which is right here, tends to go down. So that's our first indicator. The second indicator we like to look at is the PPO line. That's the price percentage oscillator. With the price percentage oscillator, we like to see that above the red line. With that above the red line, typically when price moves, or the blue line moves above our red line, which is the moving average, price tends to go upwards. Here's price. So those are our 2 indicators. We look at those for every single one of our charts. If you have questions, please write those in the comments below. So based off our 2 indicators, what are we seeing here, guys? Very interesting for IVV. As you can see for the derivative oscillator, these green bars here, we did have a positive green bar on our weekly charts. That is a really good sign, guys. We could see a breakout there. That is something we have not seen yet. Our PPO line is above our moving average line. that is a green go signal for this chart. This is a good place to have money. We'll most likely be moving funds into this chart sometime Monday or over the weekend. So please keep that in mind. Check our Facebook and Twitter accounts to see those moves. Moving into the next chart, this is also called a weekly Facebook or a weekly fake out. So that is very interesting to see that on a weekly chart. Pretty rare to see that. Usually we always go from green bars to red bars, and then back again. We had one of those back here, as you can see. They are pretty violent when you have one of those, but overall a good chart, guys. And like I mentioned, let's look at the short-term charts for IVV. What are we seeing there? Another fake out here on our derivative oscillator. Look at that. We went from 0.7 to 0.9, so that's positive there. PPO line is getting closer, but did not cross. That is positive. Probably a good time to invest and get in this fund. So please keep that in mind for IVV or the C fund S&P 500. Let's look at VXF. What are we looking at here? This fund, guys, is pretty hyperextended. It is way above the trend line here. We did bust this trend line, which is positive. Now it's kind of testing that to see if it can stay above that. But this chart has been just rocketing since November. Quite incredible to see that for the small caps. Overall, we are above all our trend lines. We are above our moving averages. Just kind of waiting to see what will happen with this chart. Let's look at it from a technical analysis. Again, we look at the same indicators with this. Long-term charts, what do we see for VXF? Still in a decline here, so that's kind of rare. We've been in a decline on the derivative oscillator for weeks now, and yet prices continue to rise. It's very rare to see that. Typically, price reacts it reacts pretty well to this derivative oscillator. I've seen that for this in the last 3-4 years. So this is kind of odd to see that. Kind of waiting to see what happens with that in this next week. As far as that goes, our PPO line is over the moving average, so that blue line is above the red line. So this is a cautionary tale. If we were to think of a stoplight, this is proceed with caution. Not a red light, not a green light, but proceed with caution in the small caps in the future. Maybe just mitigate some of your portfolio to these funds. On a 4-hour basis, this chart is still going down. So another, like I mentioned, caution here. Derivative oscillator still dropping off, not positive. Price is not reacting to that very well, but it is starting to just kind of stagnate off a little bit ever since the 10th of the month, so keep that in mind. PPO line has not crossed just yet, but it looks like this next week it could do so. Please keep that in mind moving forward. Be cautious with this fund. Moving on to EFA, what are we seeing with EFA? EFA is well within its trend lines. Good safe area to be in, above the moving averages, but not at the top of the trend lines. Got some room to go here for EFA, so that is a positive sign moving forward with EFA. On our charts, what do we see? EFA International or the iFund. iFund, what are we seeing here? We have some mixed. I don't like this when the lines are like together like this. I don't typically like that. That's kind of a red flag to me. We are in the red here for our derivative oscillators. This is a red chart for right now. I think this could really improve in the next 2 weeks. So please be watching our videos in the future on this. This is for long-term charts. Red here, red here. This is a not invest in this fund for right now. We'll have to wait and see where that goes in the future. Moving on. This chart has not EFA has not performed as well as some of our other equity funds, but it could be a good fund in the future moving forward. On a short-term basis for this fund, what are we seeing? We did see it pick up just a little bit here for a short-term basis, but so that would be a green light there, and our PPO line is way above our moving average, so that's positive there. Ever since February, this chart has really rocketed off for the short-term basis, so please keep that in mind. The last chart we want to look at is AGG. What are we seeing with AGG? AGG kind of hit the bottom of its trend line here at $116. Very bottom, below our moving averages. Look at these moving averages start to turn over. That is very negative, not a good sign. Ever since August, this has not been a good fund to invest in. Every time we've hit this trend line on the bottom, it's gone up for a very short-term basis, but then continued in this downward trend. Would not be invested in this fund in the long term. I'd keep your money out of AGG moving forward. Let's look at it from a technical analysis. AGG, what are we seeing on a long-term basis? Ooh, look at this decline, guys. Look at we saw that this was going to try and pick up here. Went from negative 2.7 to negative 2.72, which was positive. A lot of downward movement on these charts, and then it continued to mount pressure here. So not a good sign here, not a good sign here. This is a red chart. Stop. Do not get in this fund for the time being. Stay out of this on the long-term basis. On a short-term basis for AGG, what are we seeing? Also very negative. Look at our two signs here. Derivative oscillator dropping off here. PPO line now crossing underneath this very negative sign there. No good. Not something we want to really be invested in for this chart on a short-term or long-term basis. Look at price here. The last 2 weeks have really just dropped off here. So stay out of AGG for now. Not a good place for bonds as the economy continues to roll along. With that being said, guys, that is pretty much everything I have to offer for this week. Where does the Top Notch channel sit? For this year, guys, we've been sitting in that G fund. The reason why, for TSP investors, for those in Roth IRA, is pretty much cash. The reason why we've been sitting in that is we've been waiting for that weekly derivative oscillator to turn around. We did see a turnaround on the C fund for this week, so be looking for us to move out of those and get back into those funds for this week. Now, because we were so cautious, we did lose out on a little bit on our funds. We did miss out on about a 4%, 5% gain on that. So, because we were watching those charts, so please keep that in mind. We're here to mitigate risk and make sure we do the right thing. And sometimes, charts aren't always 100%. If we had a chart that was 100%, we'd always follow that for that information. So, be looking for us to move into those equity funds for this week. And that's pretty much it, you guys. Have a wonderful week. It's another top-notch video. We'll see you guys next time.